Welcome to Trending Thursday, folks. I can't believe you did that to me, Joey. That was wrong. Holy smokes. Welcome to Trending Thursday. You got Joey. He got me. He got me good. He got me good. He got me good. All right. I was making coffee and he threw me all off my game. I'm just that was wow. Wow. I'm finna cry a little bit. And now Joey's gonna laugh about it. He's gonna laugh about it in the chat. Wow. It's okay. I still love you, Joey. This is the place you come to get entertained, but this is the place you come to get some information on what's going on in the market. Big moves to the market today. We did not hear pour some sugar on me, Mark says. I can't believe y'all heard. I was really. Anyway, Tesla's weighing down the market. Something that I've been talking about as far as all the price cuts they've been given. And they're going to do it some more. But we're going to talk a little bit about it. And actually, I put out a short on the YouTube channel about it as well. And in preparation of the video, the 6 p.m. video is going to compare Tesla and Ford and the back news behind them and what I think about them and where I think your money should be best spent in regards to both of these stocks. Tesla playing along. Now, Mr. Max Biker, I'm with you on the long game. I'm with you on the long game when it comes down to Tesla. But short term, a lot of people are going to get shaken out because, with the lowering of the price of the cars, it's going to bite into margins. Investors don't want to be in a company where they're not making the money. So, and Tesla's in the process of taking out the competition. W. Phillips, I don't, right now, I don't know where the competition is really coming from. Tesla is the big boy when it comes down to EVs. Whether it's NIO, whether it's Rivian, whether it's Lucid, whether it's Ford, Tesla is still the big boy in the spot. All right, how low can it go? That's a good question. And if you watch tomorrow's video, I explain where I think it will go before it does rebound for the long term. All right, I do talk about that in tomorrow's video. There's a spot that I'm looking for that historically over the last 3 months where the stock will will rear its head to start moving up to the upside. So keep your eyes out for that. It's going to be tomorrow's 6 p.m. video. Can you get the mobile app on its own, or do you have to be a full subscriber first? Alistair, you can be just a mobile subscriber. You can be just a mobile subscriber. And as a matter of fact, tomorrow at 12 p.m., it is at 12, right, Joey? Tomorrow at 12 p.m., I do mobile app coaching. I show it to you. Thank you. Drew says, GT looking fresh. I had to get up early this morning. I had a barber appointment at 8 o'clock this morning. You should try it for the voice. What voice? It bounced around 100 in January, says Paul and Tesla. Tesla has a small gap in the area of 114. We're going to talk a little bit about it today. All right, so as I look at the market, 2 red lights, and a lot of that is dealing with Tesla. Tesla is weighing heavy on the market. It's funky how a stock as big as Tesla or a stock as big as Apple, when they miss, they could really pull the market down. Glenn, did you get a lollipop with that haircut? No. I'm too old for a lollipop. Hair looks nice. Tip the barber. I did. I gave my barber a $10 tip. Give my barber a $10 tip for the haircut. We did. Joey was complaining every day about my hair looking jacked up. Roger says, how many EVs does it take to crash? Oh, man, that's not nice. Didn't Amazon lose money, but the stock went up, but not in this environment? You talking about when it made its investment into Rivian? Ford did too, and Ford pulled back out of the deal, but Amazon was still heavy in. Was it Rivian or Lucid? I think it was Rivian. All right, so let's go take a look at what the market looks like today. All right, based on the news. Here is my graph of the market. This is the 3-month view of the market. Now, I am all of the mindset, even coming off this level of support with the current market, with the current economy, this move up, I still called it irrational exuberance, and I still will. There you go. JD just says markets can stay irrational for longer than you can. I still call this irrational exuberance, and I call it that way because what changed in the economy, what changed in the market for the market to believe that it had legs to the upside? It came back down to 3.8 held. Where are you at right now? This is a big level for me, that $57.15 level. If the market can't get through that, the market does not have upside ability. Badger says, did you leave your Western hat at the barbershop? Does anyone go to the barbershop anymore? Mine calls himself a stylist. Bigger tip. Listen, when you go to a stylist, it's like a $40 haircut. I'm not doing that. I ain't spending $40. I said to my wife, I said, if I ever have to pay a $40 haircut, you're going to cut my hair. My wife looked at me and said, nope, I love you too much for that. All right, so John says, I'm okay with some market smashiosity at this point. I think the market needs some pullback. I think the market needs some part. This is all irrational in my opinion. There's that level we can't break through. I'm looking at the 3.8 curving over, but I do see open candles. Let's go look at the market today. Let's put this on intraday, 1 minute bars, current day. Look at the markets all over the place. Look at this. How many people were in the jockey club this morning, type of 1? How many people were in the jockey club this morning? It was tough to try to day trade this. There's the gap down. All right, there's the gap down. And look at that. We went up. We faded the gap. We came back down. We faded the gap some more, and we're coming back down some more. Today is a roller coaster ride. Today is a roller coaster ride in the market from a day trading perspective. If you are a day trader, we do have a day trading timing signal. And the last signal we got was at 10:30 this morning. All right, it's still up because the DTI hasn't gone below, the bullish DTI hasn't gone below the value of 1.2. All right, so that's where we stand. No, it did. We're yellow. We are yellow. Sorry about that. We are yellow. We are cautious even on our day trading timing signal. Where's your hat? My hat's at home. Today is Thursday. It's not Wednesday. I wear my hats on Western Wednesday. Sigh. Jockey Club in Glen tomorrow. Be there or be square. Yes, I will be doing the Jockey Club tomorrow morning at 9 o'clock. All right, so I wanted to give just a basic synopsis of what's going on in the market, whether it's an end of day, whether it's intraday, just to give you a feel. This is a tough market, folks. All right, this is a tough market. This is a trader's market. This is a trader's market. So now the next question you ask yourself, is how can you make money over and over and over again? Well, there's a couple of different ways. I'm going to give you some stocks to look at. I'm going to give you some contra ETFs to look at. You're going to have to make the decision on what you want to take advantage of. But what if you learn to be an options player, stack the odds in your favor to consistently make money? Before I bring on my guest, I need us to invite people because this could be some life-changing stuff right here on what you learn. Everybody right now, Joey, put the link out there. I think he pinned it at the top. No, that's the shorts. Joey, put the link out there. I want everybody right now, before I bring on my special guest, to invite people to the room. Because from an options perspective, what you're getting ready to hear about, many of you already know, but a lot of you don't know. What you're getting ready to hear could be an opportunity to change your life in the way to consistently, hear the word that I said, not just make money, but to consistently make money with options. All right, with that being said, Randy is here. I got to look at Tupperware. Something tells me, is this going to be posted to the channel? Yes. Randy, today I just have to look at Tupperware just because you're here. Just because you're here, I'm going to look at Tupperware. I told my followers that Elon Musk is Glenn's special guest. Is that okay? Hell no, that's not okay. That's lying to people. That's lying to people. Hi-ya. And then Joey puts that up there. No, my special guest is beyond Elon Musk. My special guest today is Ron Wheeler. All right, everybody give him a hand. Everybody clap in the room. Everybody give him a hand. Or type of 1 in the room, one of the two. Either clap or type of 1 in the room as we bring on Ron. Ron is doing something called the options paycheck, and he's going to talk a lot about how to generate 3% a month. Ron, take it away, buddy.
Oh, hi, guys.
Hi, Ron.
Am I on?
You need to tap the mic and say, is this thing on?
I'm just messing with you guys. Of course, I know I'm on. Well, hey, it is time again for me to launch my options paycheck stuff. So I figured I'd come on here. We'll talk about options if you have any questions about it. Like Glenn said, our goal is to help you average about 3% per month in options trading. And we've successfully done it. We've had some up months, we've had down months, we've had a couple down months in a row. But overall, if you look back at the 8 years I've been at VectorVest, we've been able to achieve that. And the crazy thing is, mainly we do it by only taking 2 trades, bull puts and bear calls. That's all we really do. Now, this year, and this is not something for the options paycheck, mind you, but this year in my every week coaching class, I've introduced some new cool stuff with the iron condors that we've been doing. That's been really successful this year. Been right about like 85% of the time. It's been really crazy. But, I do all these trades with options. I look at stocks in VectorVest. I apply all of our great VectorVest analysis. And then what I like to do as part of the core of what I teach in options paycheck, but then what I also do for real life, because the options paycheck for me is not just a class I teach. My life is options paycheck. Everything I do is revolved around that type of trading, that credit spread mentality, because honestly, it just makes my life easier. I've been trading now for 27 years, I guess it is. Is it 27? 26. Well, 7 plus 6 is 3. 26 years. So I said 27, I lied. It was 26. I've been trading for 26 years. And when I first got started, I was a day trader, and I loved day trading. It was great. I made a lot of money doing it after I learned how to do it properly, and I got my face kicked in for a couple of years. But I learned how to do it properly and did very well. The downside of day trading was I had to be in front of my computer for 8 hours a day. I had to be very adept at things like technical analysis. I was a very keen, I still am for the most part. I just don't use them as much as I used to. I had to use things like Gann and Fibonacci and all that kind of stuff. But I had to be there to do these trades. And after spending, 15 years for the most part being a day trader, it got old. Yes, the money was good and I was doing very well, but sitting in front of your screen all day after a long time is just, it gets old after a while. So one of the mentors I had in trading actually traded options, and he taught me a lot about being an option seller. So I kind of slowly started implementing that in my trading. And then eventually, once I was able to reproduce the amount of capital I was trading and the amount of profits I was making, I kind of solely went over to options. And all I do now is, I trade twice a week with 3 times a week if you count all my classes. I get together with my students for 3 hours a week, Mondays at 11 a.m., Mondays at 2 p.m., and then Wednesdays at 2 p.m. as well. And all I do at this point is options trades. That's it. Most of them are based around the income idea. And for me, income just really comes down to one thing. When I look at something like a paycheck, right? A paycheck is something that you're supposed to get a lot. You're supposed to get that consistently. So that's why I call it income trading. You're taking a stock that you think is going to go up or you think is going to go down, or I place it on the S&P 500, and I try to place a trade where I have the ability to profit even if I'm a little bit wrong. So that's the idea of what I try to do with options. I'll give you guys an example. This is a trade that I'm currently in. So if you want to watch a trade that I'm in, I'll give you guys a look at it. Glenn, if you want to pull up a chart of Take Two, TTWO, and we can kind of look at that graph, and I'll show you what I do. All right, where we go, Take Two. I don't know about that. Just like a daily chart over the last 6 months. Daily graph, 6 months. That's all you really need. Nah, not really. So ultimately, Take Two is what I would consider a mildly bullish stock. Why is it mildly bullish? Well, because, if you look at it over the last year, it's kind of humming around in almost like a sideways manner. But if you look at it over the last 6 months, it's been trending from a 52-week low of $90. So I'm not uber bullish on this stock, but I'm bullish enough to where I want to take a chance. I think that this thing's got some more life into it. I hope it's got more life. So I've got a couple options here, no pun intended. I can buy 1,000 shares of Take Two or 100 shares, right? Now, the problem, the stock's at 124.46 right now. Now, the problem with that is if it goes up, I make money. That's not really a problem. But if it goes sideways, I really don't make anything. If it goes down, I won't make anything either. I have to sneeze. I know, right? I mean, it blew my headset off. I had to sneeze so bad.
Holy smokes.
Crazy. Sorry. Excuse me. Normally I try to avoid doing that when I'm doing presentations or I'm doing live interviews. But you know what? Hey, I feel like, I'm with Glenn, so I got a little bit of carte blanche here.
Wow.
All right. So anyway, other options I have, no pun intended. I could buy a call. Now, the problem with buying a call is that when you buy a call, you have to overcome the premium. So if I go out there and if I was buying a call correctly on Take Two, and I'm looking at my other screen to kind of set this up to where I'd probably buy a call, and you can take this as free if you want to buy a call advice for something like Take Two. I'd probably go out there and buy a June 16th 120 call. Okay. Right now it's trading for about $9.95. Now, the problem with that trade is this. For you to really make money on Take Two, the stock's going to have to go to about 130 before you can actually make a really, really good amount of money. Because if I buy a 120 call and the premium is $9, I have to overcome that premium value to make money. So it's going to have to go up $6, $7 a share before I can even start making any serious money. Now, if you don't want to spend that kind of money to buy a call, you can do other types of trades. You can do what's called a bull call spread. You can buy a 120 and maybe sell a 130. That's a great trade too. But again, the problem is it still has to go up for you to make money. So when I see a trade like Take Two where I want to be a little bit bullish on it, it's not the best stock I've ever seen, but it's one that I'm willing to take a shot on. When I think that a market or a stock will go up, I sell a put. Now, why do I sell a put? Well, think about this. If you've ever traded options before and you think a stock is going to go down, what do?
You buy a put.
You buy a put, right? Well, what happens when you buy a put and the stock goes up?
You lose money.
You lose money. So if you reverse that, if I sell a put and the stock goes up, that put that I sold starts losing its value. I can sell it on a Monday for, and I can actually tell you exactly what I sold it for because I did it on Monday, actually sold that trade. I sold a 120 put on Monday for $3.75. Now the goal is if this stock goes up, that put is going to decrease in value. Now, the cool part, in my opinion, about this trade, and I don't know if you can kind of identify on that graph where 120 is, if you want to zoom into like a 3-month or a 1-month graph on that thing.
Right about here.
Right about there. So I'm giving myself a really good cushion here to be wrong. So the way I take this trade now is I sell a 120 put. Now, for those of you that have ever traded options before, selling naked options can be very, very dangerous because if the stock goes down, for some reason volatility explodes on you, you're going to sell that 120 put. But when you sell that put, you have an obligation, right? I always like to say selling options is like when you buy car insurance. Every 3 months, I send a check to my insurance company. It's like $1,200. We have a nanny that's like 18 years old, so our insurance went up ridiculous. Anyway, at least I'm prepared for an 18-year-old teenage girl in the house. So anyway, the whole idea of that is this. I bought the premium from that company. They sold it to me. I wrote them a check for $1,200. Now, they're not actually doing this, but I could just, in my mind, I see some guy tapping his finger saying, okay, I got 3 months left on this insurance policy. If Ron or his family doesn't crash the car, we get to keep all $1,200 of that premium. The insurance policy expires, they win, they keep the premium. Nothing ever happens. Now, if I wreck my car, I call the insurance company and they have an obligation to protect my property. Options, the same thing. I sell that 120 put with the idea that I'm never going to have to perform the transaction. When you sell a put, you are obligated, if you're option buyer or an option buyer wants, to buy the stock at $120. I don't ever want to buy the stock. I'm only doing this as a vessel, if you will, for an investment. I think the stock's going to go up. I sell a 120 put. I collect $375 a contract. And my expectation or hope is that the stock goes up, it expires with less value, or it decreases value, and I can go ahead and get rid of that option to somebody else, and I make money. Now, the risk here is if the stock does something dramatic, right? Let's say it sells off, and all of a sudden there's like some crazy announcement, not earnings, because we can avoid earnings, that's easy. But let's say that all of a sudden Take-Two is fined by somebody or other, and the stock drops down to 80 bucks. Well, I got a problem. I have the obligation to buy the stock at 120 bucks. Now it's $80 a share. I got issues. That's going to be a serious loss. So I buy purchase protection. I sell a 120, grab premium. I now buy a 115 because that protects me. If the stock were to drop to, let's say, $80 a share, yes, I may be obligated to buy the stock at 120, but now I have the right to sell it to somebody else at 115. So doing what's called that bull put spread protects me from any obligation that I might have to do. Now, if anybody out there is maybe a little worried about obligation, well, Ron, I've been doing this 15 years. The obligation that I have is really theoretical. It's never happened to me before. I've never had to do it. I've never actually taken stock from one of these spreads because we manage them properly. When we get in, we look for a profit target. The biggest risk you have of your option being assigned or you obligated to do a stock transaction is when your option is called in the money. So if I sell a 120 put, that's out of the money, right? That's the equivalent of being short Take-Two at $120 a share. Well, why would you want to be short Take-Two at $120 a share when the stock's at 124? You wouldn't want that. So you would never exercise that option. Now, if it's 119, you might think about it, right? But here's the kicker. Remember what I told you about if you buy a call, you have to overcome the premium? Well, the person that bought that 120 put for me, they paid me $3.75. They're not really going to be in a position to where they can be really profitable unless the stock drops to like what's the math here? 116.25. So I really don't have a lot of risk of being assigned that stock until Take-Two drops below 116. Guess what? I'm not going to hold it that long. I sold a 120 option. If Take-Two drops below 120, I'm going to walk away from that trade and exit with a small proportional loss. Now, I do this for a living, if you will. I teach it in the options paycheck. I do these trades with my clients every Monday and Wednesday. Last year was one of my worst years for accuracy on record. I was 57% right in my trades. Not bad, but again, 57% for me is pretty low. And it's not because I am some genius stock selector, right?
I think you are a genius.
Okay, for options, I'll give you a little bit. From the stock perspective, it's not that I'm a genius. It's just that I put my trades together like this. If the stock goes up, I win. If it goes sideways, I win. As long as it stays above 120, I have the chance to win. And last year, my average winning trade was about $900. My average losing trade was about $700. Now, this position on Take-Two that I put on, I did a bull put spread. I simultaneously sold a 120 put and I bought a 115. I collected $1,595 in premium. My goal is to stay in this position till the options decline enough to where I can sell this back to the market for right around 800 bucks. I collected almost 1,600. My goal is for this position to drop in value to $800. Then I'm going to go out to the market and give it to somebody else. I'm going to offload it to someone else. Now, you might be thinking, Ron, why would somebody do that? Well, we're closing transactions. We're all closing transactions. So it's not like I'm signing loss to somebody else. When I sell a put, somebody else is going to close the transaction with me. When I buy it, somebody else closes it. My goal is to make about $800 in this position. My loss, if the stock goes below 120, it's going to be about $700. So I've given myself, based on statistics, about a 65% chance of profits and only a 35% chance of a loss. If that stock loses, I'm still going to lose less than my average gain. Now,
hold on, Ron.
Sold options.
Question comes up with Mark. you sell a put, can you get out of the obligation before expiration if you see it's going against you? The answer to that is yes.
Yes.
Absolutely.
Yep. On the other side of it, we're also going to get out of it before expiration, even if it goes for us. We don't ever take trades to expiration. There's been a lot of, and my own research on this too, there's been a lot of research, a lot of back testing, a lot of statistics that say the longer you hold on to a trade, or in this case, even these option spreads, you're actually going to make less. Why? Because you're giving the market time to move against you. The longer you hold on to something and try to reach more profits, that's why we have like things like profit locker for stocks, right? That way, every time the stock goes up, we inch your profits up a little bit more, and then we keep a trailing stop on it because we don't want you to give back all of your profits. Options are the same thing. In this particular instance, like I said, I sold the spread to somebody for $1,600. My objective is to exit that spread when it's worth $800. That means I keep $800 in profits. And if it goes below 120, I will exit the spread. Now, if it goes down in price, I'm going to ultimately exit the spread at what's 6 plus 7, 13,
13.
at $2,300. So think of it this way. When I enter the trade, I collect $1,600. They actually pay me. When I exit the trade, I have to pay back. So my goal is to collect $1,600 when I enter and pay back $800 when I leave. That means I make $800. I get to keep $800. Now, if the stock goes against me, I'm going to pay back $2,300. If it goes against me, I think 16 plus $700. I think that's right. I mean, you guys have, okay, cool. My math is terrible. I've been discussing this with my neighbor. My arithmetic is terrible. I actually have really good math skills, just not arithmetic. Like, if you want to discuss trigonometry and algebra, I'm the guy. Just don't ask me what 3 plus 5 is, because I'm like, oh my God, I got my calculator.
It's 8.
Okay, thank you. I'm going to write that. I'm going to put that in one of my notes.
Okay.
But that's basically what I do. I do this as my primary way of trading. I take the great stock selections from VectorVest. That's how I got Take 2. And I actually did that trade on Monday, by the way. I entered the trade and I got paid $1,595. As of right now, it's trading for about $1,500. So I'm up about $100 in the trade so far. And these trades last about 7 to 10 days. So I would tell you, don't go out and try to place this trade. It's a little too late for that right now. But if you want to follow along with something that I normally do, this would be a really, really good example. Another thing that I do that, I'll be honest with you, over the last couple of months has been about 50-50. Normally I trade the S&P, and the S&P is about 60% right in my trades. Over the last 5 months, the S&P has been 50-50. I make $150 a contract and I lose $150 a contract. There's going to be times like this over 8 years where you have periods like this. But I'm in an S&P trade right now as well, and I'm bullish on the S&P slightly because the dew is turned up. And I've got a position at 40.85. So if the S&P stays above 40.85 over the next probably 5 to 10 days, I'll be able to walk away with some profits on that. If it falls below 40.85, I'll be able to, exit that trade with a proportional loss. So that's what I do. That's my whole options mentality. Every trade that I do for Paycheck, every trade that I do with my URS class, well, I don't want to say every trade, like 99% of the trades I do are set up to where I can make money even if my direction is ultimately wrong. And that's how you create income. You create a trading scenario to where you can make money even if your analysis turns on you.
So I put up the website for your free webcast.
Yeah. Give us join us, vectorvest.com/OP register. If it's something that you're interested in, hey, even if you want to just learn a little bit more about what we do, sign up. We're doing some free webinars over the next next week or so. I'm doing the strategy of the week on Friday, basically on 5 key things you need to know about options for income. I actually am using the example of Take 2 in that. I'll show you the risk graph and I'll show you the graphs of everything a little bit closer. But like I said, this is something I've done now with VectorVest for 8 years. I've been teaching the options Paycheck for 7. It's one of our more popular events. It's really something that you can do to add a little bit of element of income take a little bit of your portfolio. I know you like to buy stocks. Maybe you do the jockey club. Put a little bit of money in the options. And listen, if you stay with it, if you manage your risk properly, I'm going to tell you flat out, it's very difficult to lose. Okay. But the key is, and this is pretty much for every trading, right? You got to stick with something. You got to say, okay, I'm going to put into this. I'm going to try it. Uh-oh, my first month I lost money. It happens. Last year I made about 40% overall. Pretty good year for the S&P being down 19%. Out of the 12 months of last year, I made money in 8 out of the 12 months. So even I had 4 months last year where I didn't make any money. So, I always tell people, if you're going to try something like this, make sure you commit to at least, a year, 6 months. Trade small, keep it small, but you're going to see the power of what this type of options trading can do for you. It's really valuable. And like I said, this is a class I've been doing now for 7 years at VectorVest. It's very popular. I do these, a couple times a year. So I would welcome you. I know Jay's a good options guy too. He and I talk all the time, but again, give it a shot. Give us a look. Come to one of those free webinars over the next week and give it a fair look and see how it can really impact on how you trade.
And there's one happening today, April 20th, today at 4:30.
Yep.
So you go to that site that Joey's got pinned, www.vectorvest.com/OP register. Is it OP register?
It is.
All right. Once you get there, put in your first name, put in your last name. Don't look at that. That's not what you're supposed to look at. Go look at Glenn T at VectorVest.com. Register. And now I'm registered. Just that easy. And then look at that. Thank you for registering. There's even a little video for right here. Download and print. There's your workbook. Click and share. Add to the calendar. And there's Ron. It's just that easy. It's just that easy. Dear Glenn, when you have guests, please arrange it so that you can go longer to make up for the time they use. Listen, I got you, Harry. Everything else that I got set up for today is going to keep it well within the time frame that we got. I got you, and I appreciate that, Harry. I do appreciate that.
We don't want to miss our Glenn time.
Well, listen, everybody, I got enough Glenn time for everybody out there. I do. Let's go see if we got any other questions. Go bring back up. See if we got any other questions in the room. Doesn't look like we have a lot of questions in here, and that's cool. Well, no, Mr. Mex Biker had a couple of questions. Do you provide initial early option trades for the newbies?
Yeah, actually, the way the class is designed, right, it's a 2-month class. So we're going to teach you how to do everything in May. And then in June, we have what's called the implementation month. You're going to be invited to my live trading, and you'll see how I place my trades on Mondays. And you'll be able to kind of piggyback off the trades that I do. So, yeah.
Next question.
We'll work with you that first that month. Yep.
How many different stocks do you use normally for your trades?
You know what? It's a good question. I couldn't tell you because all of my trades come from VectorVest scans. So it could be, I don't have a select basket of stocks. I run things like long-term winners, RS descending, S&P 500 winners. I run things like, and by the way, if you come to the class, I'll give you all the scans that I use with all of my little modifications for them.
So there's a lot of perks.
Ruler stocks. Yeah. I use things like ruler stocks. I use things like, actually, let me look at my scans and I can tell you exactly what I use. Vector plus Vector 125, safe and sound, ruler stocks, premier growth stocks, long-term winners, high VST and YSG. So I've used Chappell's Champs in the past. The comeback kids, VST giants, basically any stock, any search that's going to give you safe, good growth, good earnings is going to work really, really well for this. So I don't have a basket that I always choose from. I just go off what the searches tell me to trade at the time.
I got one more question. Mm-hmm. So your concept is to get a fixed amount of money from the sell. Then you try to reduce the amount you have to pay back.
Exactly.
There you go, Roy. That's it in a nutshell.
Yeah, I mean, it's being a seller is essentially, I know it might seem corny, it's basically the reverse of being a buyer, right? When you buy, you outlay money with the hope that you'll get more money back when you exit the trade. I reverse it. I collect all the money up front. with the idea of sending out less of my money at the end of the trade. So just the opposite.
One more question. Have you seen any success with the SPX 25, or are you only doing the SPX 11?
I've been doing the SPX 25 now for basically a year and a half. I've back tested it for a long time. So yes, there's definitely success. Like I said, we're in about a 4 or 5 month period right now where it's been 50-50. And, I've looked at the numbers on this thing back, as far as 10 years. There's times, and over the 10 years, it's averaged about 4.5% a month. But that also includes areas where for 3-4 months, the system really doesn't make any money. So yeah, long-term results are very promising. I've been trading that version of it now for about a little over a year, and I'm up overall. Again, in the last 4 months, I really haven't made any money on it. I haven't really lost any money either, which is good. But over the last, 13, 14 months, it's been good. So long term, it's really good. Over the last couple of months, not so great. It's been about 50-50, but it's the trade that I place every single week.
Michael, I'll answer that question. In case the second buy puts is more expensive than the first put you sell, then aren't you losing money? And I'm going to answer that. You're buying those puts way out of the money. You're buying those puts way below the stock's price. So because they are so far out of the money, the cost for those puts will never exceed the puts that you sell because they're higher. They're closer to the stock's price. That's where you're going to get the premium. You're going to get more money there. If you're in a trade where that happens, something ain't right with that trade because you're so far out of the money. There's no way that put should ever exceed the amount of the premium you're receiving.
Exactly.
Right.
Like for instance, my take two trade, I sold the 120 put for $3.75, and I bought the 115 for $2.30.
Yeah. If you're ever buying and it exceeds the premium that you receive, something ain't right.
Right. No bid price or something, or the open interest, or the liquidity is very, very low and it's out of whack.
Right.
Which is a trade I wouldn't do.
All right. Listen, Ron, I want to say thank you for being here, my friend. I do appreciate it. You know, I will always have you on whenever you need to be here. That's what it's all about. I hope to support every department within the VectorVest program. So glad to have you here. Everybody put ones in the room to thank Ron for being here. Thank you very much, Ron. I do appreciate it. And the link is still pinned at the top. Click on it. Support him. It's a free webcast today. And like he said, just give him a look. Just give him a look. Come with an open mind and let him talk to you a little bit. And we'll go from there. Ron, thank you, my friend. And until the next time, you may have to be back on again shortly. Just the same. So we'll go from there. Thank you again. And I see all the ones coming in. Thank you very, very much. Hit the like button as well. Hit the like button as well to let me know that it was working for him. He was a special guest. He was special. He was more special than Elon Musk. Let me tell you. He was more special than Elon Musk. All right. With that, the link is still at the top, pinned. Click on it. The webcast today is at 4:30. It is free. It is absolutely free. Absolutely free. Go check it out. All right. We're going to go take a look at some other things that are going on in the market. And as Harry said, Harry, I got nothing but time for you guys. All right. I got nothing but time for you guys. Let's go see what's going on in the market. Talk about some economic stuff. Banking crisis forces the ECB policymakers to rethink rate hikes. Do you think that's going to come over to the U.S.? Look at the second part of the statement, though. But focus still firmly on inflation. And I think that no matter what happens with the banks reporting here, the U.S. is going to have the same mindset. That they're going to concentrate more so on inflation than when anything is there for a crisis. All right? Another, home sales fell in March amid volatility in mortgage rates. Okay, that's another part of the shrinking economy. Drop in transportation stocks foreshadows weakening economy. How many times have we seen the story that airlines, travel stocks are saying they've got record bookings? And I've been stating over and over again in the state of the economy that we're in right now with a recession. I still think we're in a recession. How are they still claiming that they've got record bookings? Well, now I think the the hens are coming to roost. Drop in transportation stock foreshadows weakening economy. Everything from the raising of the interest rates is starting to roost. It is happening. All right, it's happening. Big story, Tesla shares fall on earnings drop. All right, but more to it. Tesla signals more price cuts ahead despite margin damage. So I was stating, I've been stating for the past few live streams that this is going to hurt them, that this is going to hurt them monetarily. But it makes sense. It will. And if enough people see that it's hurting them in the pockets, they're going to pull out. But there's few of you that are in Tesla for the long term. And I understand that. I think Tesla is a solid company. I think short term right now, Tesla's going to be under some selling pressure. So the next story says, Musk says will put sales growth ahead of profit. At this particular point in time, all he wants to do is sell vehicles. So he's going to continue to cut. There's going to be a sixth price cut coming shortly. All right, I'm seeing that. There's going to be a sixth price cut coming shortly. All right, and I don't know. I guess from a business perspective, can he continue to do so? Do you think so? Do you think so? Do you think that they have the wherewithal? Type of one, if you think that they have the wherewithal to still be okay with the price cuts. Type of two, if you think it's going to hurt them. Type of one, if you think that Tesla has the wherewithal to be okay with the price cuts. Type of two, if you think it's really going to hurt them. I'm just curious to see what you got to say. I think it's going to hurt them, but I still think that they are a strong company. And no matter what I've said in a video, short term, there's going to be some pain on Tesla. But long term, I still think that it's a good company. Now, do you want to sit through the downturn on Tesla? That's the question that you've got to ask. John is right. Short-term pain for long-term gain, bigger market share. Do you really want to sit through the downturn, though? All right. Another stock that missed, AT&T shares shrink after the company paused softer than expected revenue, cash flow. Norway, remember I'm going to be there's a video for tomorrow and it's going to be coming out talking about both Tesla and Ford. Big move for Ford. Norway is one of the leading EV development countries in the world, Ford executive says. Ford is expanding out to sell their F-150 electric vehicle in Norway. You want to know more about the backstories between Tesla and Ford? The 6 p.m. video, go check it out tomorrow. The 6 p.m. video for Friday. A meme stock makes the news. Bed Bath & Beyond tumbles amid mounting bankruptcy fears. Back and forth. Are they going to go bankrupt? Are they not? Are they going to go bankrupt? Are they not? So shares dropped the most since March 31st. Did that woman just lift up all those weights? Did y'all just see that? Anyway, after a 95% 3-day gain. After a 95% 3-day gain, they're pulling back. So those are my stocks that are making the news. And let's go take a look at them. David says, is Tesla trying to eliminate competitors? I am still going to say, let me ask this question. Does anybody really believe that at this point Tesla has a real competitor? Yes or no? All right, there's a reason why I'm asking that question. Does anybody really believe that where Tesla sits right now, that they really have real competition? Yes or no? All right. And I want to see what you guys say, because I am going to be on the side of no. I'm going to be on the side of no. They are the big boy in this space. And Tushar says Ford. Ford is a big company. Ford is a company that's been around a long time. But I want to show you something. If I had to look at the difference between Tesla and Ford, so Tushar, you say Ford. If I had to look at the difference between Tesla and Ford, there's Tesla, there's Ford. And I'm going to talk more about this in the video tomorrow. All right, Tushar, I'm going to talk a lot. But if I just look at them, Tesla, fundamentally sound. Ford, not. Tech is a decade ahead, Mr. Mex Biker. I'm right. Tesla is so far ahead of the game, folks. You say Neo and Rivian. Phew. Let's go check them out. Neo, RIVN, is it? Yeah, there we go. You want to look at them? All right, let's talk about the competition. All right. There's Rivian. There's Neo. Neo is like Ford. No fundamentals. Rivian at least has some upside. But what's hurting all of these stocks? All of these stocks have RTs below 1. All of these have RTs below 1. You know what else is different? Tesla grows their earnings at a clip of 35% a year. The closest one is Rivian at 21% a year. Interesting that Rivian is, out of all of these companies, is the only undervalued one. Rivian is the only undervalued one. That gives me something to say, But when I look at comparing these, where would you rather have your money long term? I would say Tesla. I looked at BYDDY. That was yesterday, Boyd. BYDDY. We did that on a live. We did that live stream yesterday. Boyd is China's Tesla. Boyd is China's Tesla. Very interesting that you use that, Zerai. Very interesting that you use that. Undervalued, fundamentally sound. Interesting that the company is putting out EVs, 186 miles, EVs at $11,000. Interesting. So if I'm going to look at true competition, and this is a Chinese company, if I'm looking at true competition, do you think that they are enough to really challenge Tesla? Earnings growth rate of 43%. RV above 1, RS above 1. That might be the only one out there. Rick says, build your dreams. Interesting. No, but Tesla is going after the mid-class market. I think Tesla is going after whoever they can go after by dropping the prices on their vehicles. They're going after whoever they can. But you know something? I like that GMT. I'm going to call you that. GMT. Let me know about, if you're looking at comparing them, maybe Boyd is the only real true competitor. All right. They can sell a ton of cars, but now I don't know much about the quality of the cars. But they can sell a ton of cars at $11,000. So, all right. So I'm putting that out there. Audi, I don't know if Audi is on that level of competing with Tesla yet. That's just, Tesla has overtaken Camry. That says a lot. I still think if you look at it from that perspective, there's not a lot of competition, but Boyd may be it. Hyundai, I do like, they got the new Ioniq 7 is out there. The model, says John. I got you. So I'm putting that out there. Elon is the best CEO, money aside. I don't disagree. I think he's a smart dude. I think he's an innovator. And I think, I think he's smart enough to know what he's doing, but I'm still telling you short term, there's going to be a lot of pain while looking at Tesla. Long term, I do like the fundamentals behind it. But long term, I do like the fundamentals on Boyd. I'm not as comfortable with Rivian, not as comfortable with Ford, not as comfortable with Neo. All right, so I put that up there. All right, so those are the stocks that were making the news. Interesting how they're all down today. All of them are down. AT&T missed. Tesla missed, the two biggest movers to the downside. No, Bed Bath & Beyond, because of bankruptcy issues. Look at that. It's at 28 cents. Good, googly muggly. Do you think Bed Bath & Beyond goes out of business? Yes or no? Do you think Bed Bath & Beyond goes out of business? Yes or no? The stock is down to 28 cents. That's tough. Hi, I'm just curious to know, would you average down on Tesla? No. I would never dollar average down on any stock. You know what I'm playing right now short term? TSLQ. I'm playing the bearish side of Tesla right now, and I'm doing very well with it. All right, I'm going to time the trade. I think long term it's a great company, but short term, I'm not going to ride it down, and I'm not going to dollar cost average down. I'm not going to throw good money after bad. I just won't do it. I just won't do it. All right. A lot of people are saying yes, they're closing stores. I hope they don't close the store in Mooresville. I like my store. I like my Bed Bath & Beyond. All right. Tesla's earnings are down 20% from a year ago because Elon keeps having to cut prices as demand for his garbage vehicles falls. Elon could have been a hero for the entire free world. I don't think his cars are garbage. I think that based upon all these price cuts, I think that it showed that they were way overpriced. I do think that. They were way overpriced. So, anyway, he's trying to create this war. And you saw the story. The story said he's all about sales growth right now, not even about margins. So, I mean, it is what it is. All right. So, Glenn, with the BSR down to 0.30, have you looked at a major down market starting at this low level? Not yet. Let's go back to the market timing graph right now. And what do I want to put on? Put on market timing graph again. And let's go put on the MTI buy-sell ratio. I think we're getting at a level where we're starting to look for a bottom. All right. I think we're getting to a level where we put it on a 3-month graph where we're starting to look for a bottom. It's interesting how I say look for a bottom as we're coming off of a swing high. This is an interesting market. The buy-to-sell ratio is at 0.29. The MTI is at 0.88. But look at where we are. Normally, those levels come down here, not up here. All right, that's very interesting. I like the question, John. This is very, very interesting. How we're getting to the levels of the market looking for as the market is rising. That's abnormal. That is way abnormal. There's no getting around that. That is way abnormal. That's not how it normally happens. Yes, Mr. Mex Biker, I am currently trading TSLQ, and I'm loving it. That is it, TSLQ. All right, so with that all being said, let's go back to the viewers. I looked at the hottest industries. Let me give you some stocks to keep your eyes on. When the market's going through stuff like this, I like looking at the industries, what industries are moving. So I went to Unisearch, and I created a search for you guys called Movers and Shakers. They're just, there it is, industry movers and shakers. Simple. Time of search. The Delta 10-day sorted on industries. Really, really simple. And then I looked at the graphs, the industry graphs. All right. So crypto stocks up 16%. Wow, that caught my attention. Until I looked at the industry graph. So I'm looking at industries that are moving. It's up 16%. But what's the industry doing right now? Am I really ready to jump on board? And as it pops up, aha! So it may be up 16%, but are you comfortable jumping on crypto now? Yes or no? Type it in the room. Crypto by way of delta, by percentage change over the last week or so, is last 10 days, last 2 trading weeks, is up 16%. Are you ready to still buy into crypto right now? Yes or no? So Mitzi says yes. Oh, Mitzi, really? Look at what it's doing. Are you comfortable into buying? It may be above the 20-day exponential moving average, Mitzi. You ready to jump on board? So if that's the case, Mitzi, I'm going to give you a choice to buy crypto stocks. So let's go find one that's moving. Financial consumer loans. Right-click, view the industry graph, right? So Mitzi, let's talk about this. Let's talk about stocks, Mitzi. Let's talk about stocks, Mitzi. We're going to talk all the stocks that are moving up and down, Mitzi. Let's talk about stocks. Anyway, financial consumer loans. Would you rather be in an industry that's moving up off the 20-day exponential moving average? Or moving closer to the 20-day exponential moving average? Mitzi, that's specifically for you. So would you rather be trying to trade crypto now or trading stocks within the financial consumer loans? All right. It's been bouncing off of 20. Why not buy here? You're talking about the crypto side? You're talking about the crypto side, financial crypto stocks. Let's go choose interest. Financial. Is that what you're talking about, Mark? EF EFG8, financial crypto stocks. Coin is trash. All right, listen, I'm not gonna judge. There's the 3 month. You're ready to take that? So you want to be super aggressive? Here it didn't bounce, Mark. Here it didn't bounce, Mark. Here it did bounce. Here it did bounce. You want to take that chance? So I gotta here. You want to take that chance? Drew said, watch Bill Maher and Ben McKenzie explain crypto to him. It was hilarious. So so what I did, Mark says all in. Yeah. So this is for you, Mark. I'm not ready to go all in. I'm just not ready, folks. I'm not. All crypto is a bull. Listen, there's no judgment zone. I got a lot of people out there that believe in crypto, and go have at it. Go do you, boo-boo. I'm just looking at right now. Mark says it bounced off the 20. He did it twice, but it crashed through twice as well. I put this on a 6-month graph. Yeah, I'm not sure. Unless that 20 holds. Unless that 20 holds. All right, so I looked at all of the different industries. I looked at their graphs. I made sure that we were looking at industries that were rising. Financial consumer loans was rising. Building residential commercial. That was rising. Building tools, that was rising. Steel basic, that was rising. And building mobile manufacturing RV, that was rising. So I wanted to look at 5 industries that were rising, and I created like an 11 stock portfolio based on that. All right, if we scroll over, there's the building manufacturing RV. There's 2 stocks there. Building residential commercial, there's 2 stocks there. Building tools, there's 2 stocks there. Steel basic has 3 stocks. And the consumer loans, financial consumer loans has 2 stocks. All right, so that's how I built this list. And we'll see come next week how they worked out. Everybody cool with that? Yes or no? Everybody cool with that? I took 2 stocks from each of the rising industries. I made sure that the industries were rising based on that search. I took 2 stocks from each industry, except for the steel. I took 3. Everybody good with checking to see how this worked out next week? Yes or no? I think that's going to be kind of cool to see. I think it's going to be yes or no. Type yes or no in the room. Dag nabbit. You guys are typing slow. All right, fine. I'm going to drink my coffee. I'm not going to listen to nobody. Okay. Finally, Jeff. Thank you. I got me a yes. All right. We'll check them out and see how they worked out. I like the idea. Mark, of course, is going to put yes or no. I knew somebody would. All right. How many people we still got here? We're losing people. That's fine. All right. Let me get through. This is the tough thing about. We're gonna keep going through. Swing trades. For those of you who are looking for some swing trades, I have the EMA squeeze. I got the EMA. Hey, yes for Bed Bath and Beyond, and B bankruptcy. Okay, I got you. All right. I got a couple of swing trades for you. And again, I still think that we got a little bit more downside to the market. But if you are wanting to swing trade, put this on a 3-month graph. This is from a search called the EMA squeeze. If you take advantage of the swing trading coaching, you get the search for free. So I'm not going to show you the search, but I'll give you some candidates. SAIA, when I looked at it, it broke above that level of resistance. It is above the 20-day. I like the rising earnings. I don't like the falling earnings growth. And I do like that RT is above the value of 1, showing me that it's in an uptrend. Let's go to the next stock real quick. Sell. Now, interesting, it's sitting in a channel. It's above the 20-day. I like the bounce off support. This is going to be where my headwinds are. At that level of resistance. Earnings per share and earnings growth are falling, but from a tech spec, the stock is in an uptrend right now. And the last stock, big move on IRDM, big enough that it broke it out of its channel on good volume, and earnings is rising and RT is above 1. From a swing trade perspective, just keep that in mind. What else do I have? Another swing trade, looking at David Paul's search called the DEW Swingers. I got 7 stocks. Look at that. When you look at that graph, you're gonna be like, holy smokes. Another good set of stocks for swing trade if that's what you're into. Watch when you look at ELF. Good, googly muggly. That is a beautiful looking equity curve. Now, it is at a 3-month high. The volume is really good. Earnings and earnings growth is good. I like that stock from a swing trade perspective, folks. Is it too late? All I say is before you go, it's interesting. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row it's gone up. What goes up must come down. Be careful with it now, but I love the equity curve. If nothing else, keep this on your hit list, okay? DHI, building residential commercial, nice move on good volume today. Was this earnings? It was an earnings play, but look at the give back. A lot of selling pressure on today's candle. A lot of selling pressure. Earnings is good. Earnings growth is falling, even though which the GRT is negative. Earnings growth is -5. Be careful with it, but it did break out of resistance. Lennar, another building residential, same scenario, rising earnings, falling earnings growth. It is above, the RT is above 1. New 3-month high, keep your eyes on it. Maxon, a solar company, rising earnings, rising dividend, rising earnings growth, and RT above 1. I like it. It's that 20-day exponential moving average is definitely holding as a level of support. STLD, the steel play, earnings, it was above that level of resistance, but came back in. Rising earnings, falling earnings growth. RT right at 1. What else? LVS, Las Vegas Sands, cleared level of resistance. A little bit of a doji cross today. That was an earnings play on good volume, rising earnings growth, and RT above 1. Keep your eye on that stock. And the last stock in here is MLCO, Leisure Gaming, rising earnings growth. Did break above that level of the channel. Let's come back in. Be careful. All right. What else do I want? I got some picks for you as well. I always like to put out good quality stocks for you to keep your eyes on. So these are all going to be fundamentally sound. All fundamentally sound. Let's go put these on my graph. Let's go peep these out on the 3-month graph. Undervalued above the 20-day exponential moving average. Rising earnings. Earnings growth is falling, but rising RT. I'd like to see it take out that 3-month high. Fix, coming off a level of support, getting back above the 20-day exponential moving average. A little bit all over the place, but clearly undervalued. I do like that. RT is above 1, rising earnings per share, and a pop in dividend. I like that. Keep your eyes on that. I'm looking at EME, rising earnings, pop in dividend, rising earnings growth, RT above 1, just went back above the 20-day exponential moving average. I'd like to see it take out these 2 levels, and it's undervalued. I'm keeping my eye on this. New looks ready. That was another stock in the steel space that I was looking at. Yes. New is another one in the steel space. Again, the steel space is moving. UFPI coming up off this low above the 20-day, broke above a level of resistance, rising earnings, falling earnings growth. I'd really like to see if I can get RT above 1, but it is undervalued. So those are my picks for you today as well. And given the current market's conditions, you can't leave out Contras. Look at that. Look at what's leading the way today. TSLQ. Anybody trading it? Type a 1 in the room if you are. I'm trading it. I'm absolutely trading it and loving it. I still think that Tesla is a great play long term. But there's going to be short-term pain. I'm playing. I don't want the pain. Stocks go down faster than they go up. I'm playing it to the downside, and I'll time it. When I look at Tesla, let's go back to graphs. When I look at Tesla, no, I'm not going to I can't give it away. Just like the Red Hot Chili Peppers. Tomorrow's video, when it's looking at both Tesla and Ford, I'm going to give you my insights on when Tesla is going to be able to time it to get back in. All right, so you got to watch tomorrow's video. I give some insight on when it's possible to start looking at Tesla to get back in for the upside. All right, so keep that in mind. All right. I got to say thank you again to Ron. How many likes did we get? we got 67 likes. You know me, I'm trying to get to 100 likes. If you like today's presentation, the insight that we've given and all that kind of stuff, hit the like button. All right, Ron took time out of his day to talk about the options paycheck. He is giving a free webcast today at 4:30. The link is still pinned to the top. All right, so hit the like button. I love bringing in special guests. So you got an insight of what's going on in the market. Got some news that was moving the market. You got some insight from me. You got some stocks to take a look at, as well as contras. All of that stuff deserves a like. All that stuff deserves a like. All right, with that being said, I will be live tomorrow at 12 p.m. for the mobile app coaching. Don't forget that. And for all of you who are in the Jockey Club, I will be in the Jockey Club, the live day trading room tomorrow from 9 to 10:30. So you'll see me twice. Some of you will see me twice. Some of you will see me once. Some of you won't even see me at all tomorrow. That's up to you. We're done for the day. All right. Adios, arrivederci, ciao, au revoir, sayonara, aloha to all my peeps in Hawaii. Bom dia, salam, shalom, namaste, yasu. Until the next time, folks. See ya.